Hey guys, Justin with Deep Dive Stocks here with another data dive. Today, we're going to be looking at Microsoft. So let's go ahead and get started. So Microsoft, I've always kind of been shouting into the void about. It is, I consider, more unstable than stocks even like Tesla. I've made a few posts about this. Most people kind of just wave me away. But today I think we're going to see a prime example of why Microsoft has been and still is more unstable than even stocks most people consider to be like the most unstable stocks, similar like Tesla. I always bring up Tesla because most people just think that that's the most unstable stock on the market, right? So this is the deep dive stock report for Microsoft produced on the 14th of Thursday, since it was a short week. And this is the VoEx graph. We're always going to start with the VoEx graphs. If you haven't, I definitely recommend checking out the video on my channel on the VoEx graph, what VoEx is, what it measures, how it's been validated, all that good stuff. But quick summary is that VoEx should be inside these two horizontal lines. That's the ideal, and that indicates that a stock is relatively stable. When VoEx moves outside of those horizontal lines above it into the inhibition zone, that indicates instability. And conversely, if VoEx falls into the propagation zone, that also indicates instability. And the characteristic price actions between the two are pretty noticeable. So, for instance, we see currently classic VoEx indication. VoEx fell into the propagation zone in January of 2022, and like most stocks with a VoEx in the propagation zone, the stock has continued to decline. And that is the most common outcome for a stock when its VoEx falls into the propagation zone, and part of the reason why that's named the propagation zone. Typically, it indicates that if there's a decrease in price that pulls VoEx into the propagation zone, that the most likely outcome is going to be a continued decrease in price, just like we see with Microsoft. What's interesting is, since falling into the propagation zone, there was a brief moment of price appreciation, and we do see that VoEx spiked up into the inhibition zone on this price appreciation, which is telling us that that rise in price that we experienced towards the end of April was still provoking too much instability on Microsoft. So if the upside has instability, that must mean that the downside is where stability is. Right? And of course, VoEx then fell back into the propagation zone as Microsoft began to fall. So what does this mean in sum? Well, it just means that continued and persistent declines in price on Microsoft is the most expected outcome. Since VoEx is deepening back into the propagation zone, the most recent rise in price was met with some inhibitory VoEx behavior. Where else is the stock to go but down? This is echoed in the snap graphs. So the snap graphs take VoEx behavior and then just basically maps it onto a up or down metric using the snap algorithm. And with the snap graphs, there's 4 intervals. So the 20 days, the 10 days, the 5 days, and the 1 week, or the 1 month, 2 weeks, 1 week, and 1 day. And we just have to look to see where the crosshairs are. If the crosshairs are below the gold line, then that's negative returns. So we see on the 1 month, the 2 week, so on the more longer time frames, we have negative returns. On the shorter time frames, the 1 week and the 1 day, we do have some positive returns expected. But still on the longer time frames, negative returns. We can then move to the hedging heat map. The hedging heat map is a new addition to the deep dive stock reports. I think they're super cool. They take all of the hedging requirements on a stock based off of its options, and it maps if those hedging requirements have to force selling of shares, which is red, or for forced purchasing of shares, which is blue. And then it maps how the current environment might change depending on the change in volatility and price, which are the two most determining factors in hedging in terms of like delta and gamma, right? The Microsoft hedging heat map is quite unstable. So in a typical hedging heat map, you want anything above the current price to be selling, and then anything below the current price to be purchasing. This is kind of normal hedging, and this is why options are actually quite stabilizing to the market if they're the right types of options, because if the price now falls, then this red gets deeper and deeper. We start seeing numbers show up, which means the selling requirement gets pretty severe. So as the price falls, we will experience greater and greater and greater selling pressure just in order to hedge all of the options on Microsoft right now. Of course, the idea is that not only will this be quite a sufficient quantity of selling in and of itself, but seeing continuous declines in price may prompt other retail selling or large institutional selling, depending on where their mandates say they got to sell. Although the one benefit is that if Microsoft does experience a drastic kind of showing of retail interest, pushing the price up higher, we can, if volatility drops somewhat, start getting into some pretty significant purchasing support. But typically, because the stock wants to stay inside of this white gamma neutral zone, which means for the current environment on Microsoft is down, we're already at like a propensity to fall. And then if we fall too much, so if we fall given the current IV down to about 275, we start to encounter that selling pressure, which can kind of pull the rug out from under us. So in terms of Microsoft, I would imagine the snap graphs are picking up on the fact that we do have this positive purchasing support, kind of like we're just on top or below it. But unless the hedging heat map changes pretty drastically, the amount of selling that is located if the price drops any is pretty significant. And also worth mentioning that it's also because Microsoft is in a gamma squeeze. So this is a classic gamma squeeze hedging heat map. And this is why, and this is also a good time to point out that gamma squeezes market wide typically fall 5% before they even start to recover. So the average stock in a gamma squeeze does have a higher propensity of falling than it does experiencing a runaway positive price event, which is what I think is a common misconception in the market. So then we can move to the expected price range graph, which kind of tells us how well behaved a stock is. So we can take implied volatility and then we can derive a one standard deviation or a 68% probability price cone, so an upper and lower limits. And this is kind of like what the market is okay with the price moving within a given time frame. And we see that Microsoft is a repeat offender of moving outside of the expected price range graph. This is not common. In fact, it's still one of the foundations of my argument about why Microsoft is such an unstable stock. Because just to bring it up again, Tesla almost never moves outside these expected price range graphs. And the volatility for Microsoft is pretty decent, right? So we're upwards to 50%, and then a few months later, we're down to 20%. That's a 30% change in the span of 2 weeks. That's pretty significant. So not only does the price move more and less, or like it always moves more than the market is expecting, sometimes on the downside, sometimes on the upside. Volatility on Microsoft is also pretty significantly high. Now I'm going to venture to say that Microsoft has probably also been in a gamma squeeze for a while just because of how volatility is behaving, but let's find out. The shorting on Microsoft is pretty unremarkable. It seems like we have a kind of a shorter term decline in shorting ever since February of 2022. Maybe that means that some participants in the market think that the floor is here, but I have some news for you, good sirs. The options layout is surprisingly healthy in terms of its morphology. So we always want this this normal distribution curve for the calls, where the majority of the calls are out of the money, and ideally the majority of these calls will be dealer long, so there'll be retail investors will have sold those calls to the market. The puts, ideally we want the majority of the puts to be out of the money, which seems to be the case, and again, ideally we want those puts to be dealer short, so that means retail investors purchased those calls. On the right, we see the change in the options. So Thursday, since it was a short week, saw a good amount of options expiry, and nothing too remarkable. We see there was a pretty healthy amount of calls being closed, but again, options expiry, so nothing too crazy. Although I don't think it was like true OpEx, right? But it was just let me check yeah, so it was just standard end of the week weeklies. The puts, good amount of puts, good amount of calls closed. But again, we do have a healthy morphology. And so the healthy morphology here tells me that some of these options aren't what they should be, right? So we said that we want those calls to be dealer long, and we want those puts to be dealer short. I don't think that's all the case, right? It can't be, because we are in a gamma squeeze, as we noted above. Here's our hedging matrix, which on the surface doesn't seem like that much. So the hedging matrix is kind of like the hedging heat map, in that the hedging matrix simply shows us exactly where the crosshairs are. So it adds some numerics to those colors. And so we see that for every point decrease in spot and point increase in volatility, 332,394 shares must be sold. And what that equates to is on Thursday, with the negative 2.71% movement in price and the 6.13% increase in volatility, which I'm pulling from here, we see that 3.2 million shares have to be sold. And with we'll round up to 30,000, that comes to about 10% of the total volume on Microsoft in the near future, or at least on average, will be geared towards selling, just in order to hedge the pretty drastic movement in volatility and price. So the point being that although these numbers may seem small on the surface, they can pretty quickly add up. And we could already see how with such a pretty significant selling pressure, how these gamma squeezes can really have a propensity to move to the downside, where, because 10% of the upcoming volume on average can already be put on the sell side, right? So if we gap down a little bit in that gamma neutral zone, then we really start hitting, even more than it is now, we start hitting more and more selling pressure. So that can really snowball. The expected price range table is similar to the expected price range graph above, except instead of just looking 1 day in advance. So on the expected price range table, we see, bloop, these are our ranges for the next day. And I would expect it to bounce up a little bit. No, I'd take that. I would if this hedging wasn't so severe. But the table tells us, extends it all the way out to T20 or 1 month. So we could expect a 68% probability of the upper limit for Microsoft being $301, and the lower limit being $258 in the next month. But the caveat being is, with the expected price range graph, we saw that Microsoft is quite the repeat offender. So since we consider, since VoEx is in the propagation zone, right? So if we go back here, VoEx is in the propagation zone, it's deepening, which is indicative of persistent declines in price. We have the more long-term snap graphs being negative. We have a quite unstable hedging matrix. We're in a gamma squeeze, and we're starting the week out with a 3.2 million share selling requirement. It seems like downside is the most likely thing. But since Microsoft moves more than expected on average, our lower limit of 258, it's reasonable to expect that will be surpassed in the next month, or at least in the next 2 weeks, where the lower limit is 264.44. And it looks like the gamma squeeze is worsening somewhat, right? But again, on Monday, if new options enter the field that kind of stabilize or at least neutralize this gamma squeeze, we might have to relook at this data. But it looks like for the past 2 days, at least, a gamma squeeze has been worsening on Microsoft, which doesn't bode too well. So that's Microsoft's data dive. I've been Justin with Deep Dive Stocks. If you like this kind of data analysis, please like, comment, subscribe, share, do all that fun stuff. Let me know you're enjoying it. If you have any comments, questions, concerns, or snide remarks, please let me know. I'm always looking at how to improve all of this. And thank you for joining me. Happy trading. See you guys next time.